6. That's cotton. All right, let's bring in our guest analyst, Mr. Oliver Slope. He's with Blue Line Futures up in Chicago. He's got a bunch of kids, so Christmas must have been crazy around your place. Some of them just playing with boxes. The other ones liking what they got, I'm sure. But glad to have you back on.
The boxes are the best. You said you had a nice, relaxing Christmas, and I was thinking, oh, that sounds nice. We had a lot of little feet running around at Grandma and Grandpa's.
Well, that's what it's all about. It's more fun like that. Mine was relaxing, but probably not as much fun. How about that?
Yeah, absolutely. Now we're back, right? I thought maybe this holiday trade carry over from Christmas into New Year's, might carry over, but we're seeing some volatility, which I think is great. Volatility is good. It presents a lot of great opportunities and a lot of markets on the move today. And we're kind of seeing an old school risk off trade in the outside markets with stocks lower and bonds higher. You look in the energy sector, you're seeing quite a bit of fireworks there as well, with natural gas gapping higher and trading about 20% higher at the moment on the back of some cold weather forecasts here in the next week or two. So a lot of things are moving. Grain markets pulling back off of the overnight highs, potentially on some of that risk-off trade in the outside market. So certainly no holiday trade here. Things are busy and on the move, which is always good.
All right, so we've had, it is volatile. We've had a decent day. We popped on the open, the overnights, doing the radio show. We saw some decent green, but now we've kind of settled back in here. Is that because, is it high enough to get these guys to open up some bins and move some stuff, or is it just that the market kind of ran out of buyers?
Well, we've had a heck of a run higher. I mean, especially looking at that March corn contract from those lows, you're talking about 13 to 15%, almost 50 cents off of those lows. And, 2-3 months ago, if you're saying, man, I wish I would have sold more corn at $4.50, I think you've got to be saying, hey, this is an opportunity. From where we're sitting at here in the Board of Trade, we got a few different perspectives. You got a trading perspective, and we work with a lot of hedgers as well. From a trading perspective, I'm pretty optimistic on the grain market still and think we can continue to work higher. But again, if you had been, telling yourself, man, I wish I would have sold corn at $4.50, this is an opportunity to protect price. And we've had that nice run higher, and oftentimes you get a nice run higher that's met with some resistance. So I wouldn't be surprised to see a little bit of a setback. $4.50 in that March corn contract is going to be a bit of an inflection point. The bulls want to defend that. If we do close below that, potentially you see a little bit more long liquidation from the funds who've been building a net long position recently.
Call me crazy, but as much as buoyant and as good as these markets have been as of late, we still have these naysayers kind of creeping around the edges saying we've still got some worries about the downside, big crop coming out of South America. Let's not get too far over our skis. Let's definitely use this as a hedging opportunity. What do you say to that?
I completely get that sentiment. I've been in the camp that I've been a contrarian, thinking that we could see more positive markets, corn, soybeans, and wheat. I think for soybeans, a lot of the headwinds have been over the potential for the South American crop, poor demand from China. I think that there's an opportunity for some of those things to maybe come back in. There's not enough risk that weather turns less favorable, or there's not enough risk that maybe China comes to the table and wants to make a deal with the new administration to help get their economy on the right track. So I think those are two underpriced risks that could potentially provide upside opportunity. Again, that's a contrarian play, but I like going against the grain sometimes.
Yeah, I agree. No pun intended, by the way. All right, great stuff as usual. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Oliver Slope, Blue Line Futures. We'll be right back. Again, it's going to be Mr. Oliver Slope, Blue Line Futures. Oliver, anything make sense to you there?
The cattle market's pretty quiet. Historically, you see a risk-off day in the equities, and that translates into a weaker cattle trade. But cattle hanging in there, and I think part of the reason for that is a lot of these risk-off trades in the outside markets have only been 1 or 2 days long, and it almost seems like the funds are saying, prove to me that this is a real risk-off trade and turn it into a little bit long-lasting event. If we do continue to see weakness in the outside markets, I would suspect that would lead to some long liquidation in the cattle complex. Funds are very, very long live cattle and feeder cattle, as well as lean hogs. And that's something we've talked about with you over the last month or so. Funds were long about 130,000 hog contracts, which is about 30,000 more than the previous record. So again, if you start running out of good fundamental news and you start to see some outside market weakness, that could potentially spill into some positioning and long liquidation, which I think is what we're really seeing in the hog market. For that February contract, 82 is the line in the sand. We're trading below there right now. A break and close below there, I think, could potentially accelerate the selling pressure here to round out the year.
Okay, what we're really asking too, though, is this a 2025 new media booth? What's going on with your background there? When you got, is this something you got going on to the house now, or what? Give us.
It's just above my pay grade. I just show up.
All right. Well, it looks good. Everybody here loves it, so it's very professional. You've got some space there. You can get some advertising in if you want to get some good money going that way. But we appreciate you coming on. Thanks for all your content all year long, Oliver Slope. He's with Blue Line Futures in Chicago. But I had to ask. I mean, that's different.
It was different. I noticed it too.
Yeah.
It looks good.